Let's see about what is acquisition of business and introduction and purchase consideration, how to calculate purchase consideration. So introduction, what does acquisition of business mean, and the next purchase consideration, and next calculation of purchase consideration, and next method to calculation, how to calculate this, and next goodwill or capital reserve, and next accounting treatment for acquisition of business. So first of all, what does acquisition or business mean? When dealing a partnership account, a sole proprietor or partnership firm may be converted into firm to drive advantage from improving efficiency and avoiding competition. Similarly, a solo trader or firm can sell the business to company or convert into the company to drive the benefit, limit liability and increase capital. We mean the accounting entry involve the purchase of business of non-corporate body or corporate body. In other words, a joint stock company formed to acquire the business, a solo trader or partnership firm. At the present, by the acquisition of business, we mean the accounting entry involve the purchase of business of non-corporate body, corporated body. The company that acquire or purchase another business called as purchase or vendi. Purchasing company is called as vendi. The seller company is called as vendor. So next one, purchase consideration and how to calculate the purchase consideration. First of all, what is purchase consideration? The vendor firm, the firm selling the business. Vendor firm is called selling the business, and vendi must agree price and acquire the business. The purchase price or purchase consideration, the price payable by the purchase company to the vendor as consideration for business taken over. The purchase determined by the agreement between vendor and the vendi. A purchase may be paid to cash, shares, debenture, something like that. And next, how to calculate purchase consideration. So mainly follow the two method to calculate purchase consideration. First of all, first one is net asset method, and second one is net payment method. So net asset method. So under this method, purchase price to be acquired business calculated by adding the value of asset taken over by vendi less amount of liability. For example, a firm holds tangible asset value 2 lakhs and liability 45,000, and then the company net asset or net tangible asset is equal to 1,55,000. That means tangible asset minus liability. And second one is net payment method. Using net payment method, the purchase price is determined by the adding up various payments made by purchasing company. For example, a purchase company disagree the purchase price by issue 1,000 share 10 each and 200 debenture 100 each. Cash payment 30,000. In case purchase price is 1,50,000. So 1 lakh plus 20,000 plus 30,000 odd is equal to 1,50,000. The purchase price. Next, goodwill or capital reserve. The purchase must be compared to the net asset acquired. If amount paid exceed the net asset acquired, then excess amount to be debited to the goodwill. How to calculate goodwill and reserve, how to calculate capital reserve calculate. So goodwill is equal to purchase price minus asset taken minus liability assume that take some value, and then minus purchase price. Capital reserve is equal to asset taken minus liability assume minus purchase price. The next, accounting treatment for the acquisition of business. A new set of book are opened. The following entry record by the purchasing company, that's mean vendi company, for purchase consideration payable is equal to business purchase account return to vendor account. The next, second one is acquisition of various asset and liability is agreed value. Various asset account to various liability account to business purchase account. Note, if purchase price exceed net asset, the excess amount debited to the goodwill account. If the net asset exceed the purchase price, the excess amount credited in the capital reserve. On payment of purchase price kinds, vendor account return to share capital account, debenture account to cash account. So already is told that how to payment to the vendor company to the vendi company. So cash share debenture. That's why I previously told that so acquiring the business. So next one is payment to the purchase price. Vendor account to sale account, debenture account, and to cash or bank account. Difference between credit and debtor total. The goodwill account are credited to the capital reserve account. So vendor, debtor, and creditor method. Sometimes the purchase company does not take a business. This because complete recovery of the amount against book debt may not possible, and trade liability may be more than estimated figure over the book debited and trade liability belonging to the vendor. So journal entry for vendor and debtor creditor account. So first of all, first one is for taking over debtors. Debtor vendor debtor account, debtor to vendor suspense account. For taking over creditor, vendor suspense account to vendor creditor account. When debt collected, bank account to vendor debtors account. But when discount allowed, vendor suspense account to vendor debitor account. When debt unrecoverable, vendor suspense account debtor to vendor debtors account. When past bad debts recover, cash account to vendor suspense account. And payment to the creditor, vendor creditor account to bank account. When discount received, vendor creditor account debtor to vendor suspense account. When unrecovered creditor paid, vendor suspense account debtor to cash account. When commission receivable for service, vendor suspense account debtor to commission account. Final payment to the vendor, vendor suspense account debtor to bank account. Alternatively, when no record maintained in the book of purchase company, only receipt and payment in company behalf the vendor record the vendor current account. Journal entry for this. In case from the vendor debtor cash account to vendor current account. When cash paid to the vendor creditor account debtor to bank account. Commission received from vendor current account debtor to commission account. When discount is allowed, vendor current account to bank account. Question of business. By continue the same, the following point may keep in the mind. First, when agreed to revalue the asset and liability for acquisition of business, a revaluation account may be open to incorporate the change value of asset and liability. The revaluation account as the administration of part that is closed by transfer into the capital account. The second is asset and liability, which is not taken over the company, transferred to the capital account. Third is close to undistributed profit to capital account is profit sharing ratio. And finally, close to adjusted capital account by debiting and credit share capital. So do certain sums, effectively utilizing the opportunities for how to record the acquisition of business, journal entry, follow this, do certain sum, you want to understand more effectively. So thank you for watching this video. Thanks so much.